Hi, this is our international investing project. My name is Preet.
My name is Mariana Sagales.
My name is Jennifer Garcia.
My name is Jesus Quintero.
My name is Linda Martinez.
My name is Brianna Cruz.
So we're going to get started with the first question, which is determine the percentage increase or decrease in each of the stocks and the reason for the change in the stock price. So for these two, these were our American stocks. So we have General Motors, GM, and they had a decrease of 21.76%. And the reason for this is a chip shortage, which caused them to not produce cars to sell. They did have an EPS of 24.41%. And a big thing about them is that they're advancing in technology such as an all-electric Hummer to hopefully push them through this dip that they're in right now. And with Ford, they had a decrease of 13.64%. A big reason, it's the same as GM. They do have a chip shortage and a shortage of supply. So the car market has gone down due to high demand and low supply. Now we have our foreign stocks, which is our Tata Motors, TTM, which had a decrease of 14.7%. And just like the other two, there is a supply shortage. So they're waiting for supplies, and those are taking a toll on production and revenue. They are advancing in technology. However, they underperform compared to American companies, and the companies are charging Tata with expensive prices for their supply. So it defeats the purpose in advancing forward. And now we have Honda, which had a decrease of 12.12%. Again, the reasoning for this was a chip shortage and a supply shortage. They had a 40% decline in sales since 2021. However, their hybrid vehicle model has been the highest source of revenue thus far.
Okay, so for this part of the project, we're going to be talking about whether the performance of the US-based companies has been driven by the US markets. So first of all, as we can see here, Tata Motors, it's one of our international stocks. We see that there's quite a relationship between Tata Motors and the S&P 500. We see that the lines were pretty much together and touching each other at the very beginning of the period that we started tracking until the end of February. It looks like after that, the lines have separated from each other. However, they still both go down or up at the same time. Tata Motors has reported a negative 16.2%, while the S&P 500 has reported negative 2.4% in that same period. So the pattern there tells us that Tata Motors price is driven by the US markets a little bit. Next to that, we see Honda Motors. At first glance, we can see that there's also a relationship between the US markets, even though that got lost for a short time. The trend lines were together right when our analyzing period started, which was February 7th. After that, we can say the relationship stopped since the S&P went down while Honda Motors went up. Beginning of March, Honda had a bad downfall, but the S&P 500 maintained stabilization and so found each other again. From there, they had moved pretty much together and had a direct relationship. So overall, for the whole period, as we said before, the S&P 500 fell 2.4%, while Honda Motors had a negative 12.3%. So for the next slide, we have General Motors and Ford. So for General Motors, we see in the graph that there's also a relationship with one another between the S&P and the General Motors. Same thing that happened to the previous two stocks that we talked about. We see in the chart that both trend lines were close to each other and having a very close movement up until beginning of March. After that, the market followed a downtrend, a downward trend, but was a lot more stable than the stock GM. We see that General Motors in this case fell 21.6% in the short period of time, while again S&P 500 was negative 2.4%. So overall, we believe there is a correlation between the stock and the market since they have behaved pretty similar. Finally, we see the chart for Ford. The last stock, so we have been following during the same period. And it's looking at the chart, we see that Ford and the S&P 500 lines had a very strong correlation, almost drawing the same line all the way until the beginning of March as well. After that, we also see that the lines have a similar behavior, but they are not touching each other anymore. Ford has been underperforming the market since then, and with a change of negative 13.8% between February 7th until April 14th.
Okay. Is the performance of our foreign stocks driven by the markets? They're driven by the markets that they're based in. So for Tata Motors, they're from India, and their market index is called the BSE Sensex. And for Honda Motors, they're Japanese based, and their market index is called the Nikkei 225. And we can see that Tata Motors and Honda Motors, they both are indeed. Their value is driven by their corresponding markets, especially with Tata Motors, because for fiscal year 2021, about 32.45 billion. That's what the revenue they reported, and the vast majority of that came from the domestic market. And so thus, whenever there's a dip in the BSE Sensex, there's a greater one with Tata, because primarily based on the fact that it's a single company versus the entire index. And generally the direction of both move the same. And as far as Nikkei, the same can be said with Honda Motors, as with Honda had a return of negative 12.12%, while Nikkei was negative 0.28%. Again, the same reason why there's a bigger drop with Honda is primarily it's a single company versus the entire index, but they do generally move in the same exact direction. They track very, very closely to them. A reason why they are down is primarily due to the fact that both of these companies, which are automakers, they've lost two target markets, which were Russia, the Russian and the Ukrainian one. And also this conflict is causing a lot of production difficulties as well, and thus the ultimate reasoning for the decline in the stock price. So are the foreign stocks highly correlated? They are, because for one, they're both automakers, and they target the same audience as well, which are more towards the budget conscious buyers. But then again, they also do have their upper end segment, so they're literally a carbon copy of one another. With Tata Motors, when they sell in the domestic Indian market, it's very cheap but affordable cars, and same thing can be said with Honda, whether that be in Japan or the US. And also what they have is their luxury divisions, which I was saying how they're a carbon copy of one another. So with Tata Motors, they own the very famous brands Jaguar, Land Rover, and with Honda, it's their own in-house brand called Acura. And so that's why they are very highly correlated. So is the performance of the stock driven by the US markets? So again, what I mentioned previously in the last slide, both of these companies do business with the US, but we can see Honda Motors is significantly more than Tata, because Tata doesn't sell their economical vehicles in the US while Honda does, and Honda also has Acura, whereas Tata Motors, they only in the US operate under Jaguar and Land Rover, which obviously do not nearly perform as well as Honda would, simply because of the price.
Okay, so for General Motors, being a corporation that builds many brands, of course, and to sell worldwide, it is obvious that they are closely exposed to the main currencies, such as the euro, British pound, Canadian dollar, Chinese yuan, among several others. For GM, their biggest foreign market is China. This means that GM is somewhat paired with the Chinese yuan. During our investment period, we were able to see very little change in the value of the Chinese currency. At the beginning of our operations on February 7th, $1 was equivalent to 6.361 yuan. And by the end of the investment period on April 14, 2022, $1 was now equivalent to 6.374 yuan. The question is if the fluctuation in the Chinese currency had anything to do with the 21.76% decrease in the stock value of GM. And the answer to that is that there is no direct evidence that the exchange rates had a role in the negative performance of GM in this specific period of time. Therefore, the outside factors that influenced this, as mentioned before, was the chip shortage and the inflated cost of transportations since COVID-19 took place. Now moving on with the second domestic company, which is Ford. So to begin with, Ford is also a multinational. It is estimated that it's in 125 countries. Therefore, yes, the company is exposed to different currencies, such as the Canadian dollar, the euro, and all of that. The biggest market for Ford is the US itself, but outside of the US, China is also their biggest market for them. And the second place is Canada. And since we already knew the data on the Chinese yuan, we looked at the Canadian dollar, and we simply noticed another small fluctuation in the currency at the beginning of the investment period, which was $1 equivalent to 1.27 Canadian dollars. And by the end of our investment period, it was at $1 equal to 1.25 Canadian dollars. So again, this movement does not signify or explains a 13.64% in the decrease in the value of the stock. So it is clear to us that the industry itself is responding negatively to the shortage of chips because it's slowing down production.
Okay, so in terms of the exchange rate movements of the firm's currency against the foreign currencies, for General Motors Company, we decided to emphasize the Canadian dollar. So for the Canadian dollar specifically, at the beginning of the trading period on February 7, 2022, the US dollar was 0.7896 against the Canadian dollar. And at the end of the trading period on April 14th, the US dollar was 0.7935 against the Canadian dollar. For Ford Motor Company, we focused on the euro. At the beginning of the trading period, the US dollar was 0.87405 against the euro. And at the end, it was 0.9239 against the euro. And so this just tells us that the US dollar appreciated with both companies. And as far as the exchange rate movements of the firm's currency against the US dollar, for Tata Motors Limited, we focused on Indian rupees. So at the beginning of the trading period, the Indian rupee against the US dollar was 0.0133. And at the end, it weakened against the US dollar to 0.0131. For Honda Motor Company, we focused on the Japanese yen, and the Japanese yen against the US dollar was 0.0086908. And then it weakened also against the US dollar at 0.0079391. And since we can see that both weakened, this wasn't good for the companies overall.
In conclusion, the observations and analysts on our investments, it is clear to us that since all of the companies we chose were in the car industry, every corporation in our portfolio followed a similar negative pattern. According to the research performed, this is due to the chip shortage issues and the increase in transportation since the pandemic took place. These factors have caused production to go down, which translated to fear to the investors, and that is why our stocks decreased in value during the investment period. Thank you.